The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. U.S. copper prices tumbled in late trading after President Trump announced a 50% tariff, not on raw copper, but on finished copper products like pipes, wires, and tubing. Prices had surged to record highs earlier as markets braced for a blanket import tax on all forms of copper. But just days before that August 1st rollout, the White House made a sharp policy shift, excluding less processed forms like concentrate, cathodes, and scrap from the tariff. Instead, the levies will now target downstream products made with copper. While this move aims to shield domestic manufacturers of electronics and plumbing components, it leaves out upstream players like miners and smelters, potentially undercutting incentives to invest in U.S. production capacity. So what does this mean for the copper going forward? Will the selective tariff structure distort global trade flows or create new arbitrage opportunities? And how might investors and manufacturers navigate the uncertainty in copper markets now? Well, to find out more, joining me now is Craig Lang, who is the principal analyst at CRU Group. Craig, welcome to the show.
Hi, Hongbin. Thanks for having me on your show on behalf of CRU.
Thank you so much for joining us. Well, Craig, since the start of 2025, copper prices have surged to unprecedented highs, fueled by the market anticipation of that 50% tariff on imported copper goods under President Trump's administration trade agenda. Was that, market rally largely triggered by the fears of possible supply disruptions and increased costs of copper raw materials for the U.S. manufacturers after the tariffs would come into force starting August 1st?
Well, as you mentioned earlier, the rally was driven by the market having expectations that the US government would impose tariffs on refined copper imports into the US. And the concern started earlier this year when the US government announced a Section 232 investigation into the imports of copper. That was on the 25th of February. And the Commerce Secretary had up to 270 days to complete his investigation. But at the time, he committed to expediting it. But that said, the market had some months' notice of the potential for tariffs to be imposed on copper. And then we subsequently had the government impose 25% tariffs on aluminium and steel on the 12th of March. And these were subsequently increased to 50% in June. So progressively, the market in the US priced in increased expectations of a tariff on refined copper. And this led to much higher prices on the US CME or COMEX exchange. And prices reached as high as a 30% premium, which is equivalent to a bit over $3,000 premium to the LME copper price. And that LME copper price is considered the reference price for most of the rest of the world outside of China and the US. And this created a huge import arbitrage opportunity for traders able to deliver large tonnages of copper to the US ahead of the expected tariff. And this in turn tightened availability in the rest of the world in recent months, and that's seen stocks elsewhere decline significantly. So over the past 4 months, the US has been importing an average of just under 200,000 tonne per month of copper. And that compares to its underlying import requirements of closer to 75,000 tonne per month. So there's been an excess of about 400 to 500,000 tonnes of cathode imports into the US market in recent months, but only part of that has been reflected in the approximately 150,000 tonne increase in COMEX warehouse stocks. So the remainder is now sitting in other non-COMEX warehouses or held by consumers of cathode.
Well, as mentioned earlier, the current U.S. administration's erratic trade policy had once again put the markets into a state of bewilderment. I mean, the White House announcement on July 30th exempting raw copper materials from the 50% tariff. What immediate market reactions occurred once it was clarified that raw copper would be exempt from the tariffs? Did Trump crash the copper market?
Well, given the market was expecting a tariff to be announced on refined copper because they were looking at what was happening with aluminium and steel, which were in a similar position, it did come as a surprise when Trump announced that refined copper, as well as other copper raw materials, would be exempt, and that instead the tariff would apply to copper semi-finished products, as you mentioned earlier. So the COMEX price has plummeted after the announcement. So pretty much the extent to which tariffs were reflected in the COMEX price, that evaporated instantly.
So how are U.S. copper markets faring at the moment? Are we still seeing a reversal from the unprecedented highs that we saw earlier in the year?
Since last week's collapse following the 30 July announcement, US copper prices appear to have stabilised at around $9,700 per metric tonne. And this is 24% below their late July peak, but it's still up 7% year to date. And the US market consumes around about 1.6 million tonnes per year of refined copper. And at CRU, we forecast 2% growth in refined copper demand in the US this year. And that's largely driven by copper requirements related to the green energy transition, so electric vehicles, renewable energy, and the related grid spend. So there is some risk that the recent high prices may have seen some delayed investment decisions, and this could yet see an adverse effect on copper demand in the US in the coming months.
Okay. But how have global copper prices then responded in contrast to the US market? What has been the knock-on effect on the LME and Shanghai Futures Exchange?
Well, LME prices are still up a healthy 9% year to date, while SHFE prices are up 6% year to date. So prices outside of the US this year have been supported by reduced availability in recent months as traders shifted pretty much every tonne of available copper that they could get their hands on to the US to chase the massive import arbitrage opportunity. We've also seen a strong start to the year for China from a fundamentals perspective, with apparent consumption up 11% in the first half of this year. And that's important because China accounts for 60% of global refined copper demand. So the strong growth in China has supported prices as well. And outside of China, most markets have seen a more moderate demand growth. India is one exception. It's been growing at 6 to 7%. And we're likely to see India consumption of refined copper exceed 1 million tonnes per year from next year. So it's certainly helping demand.
Well, taking a look more into the numbers here, from April 1st to July 29th, COMEX copper futures jumped from about $9,600 per ton to $12,300 per ton, marking the highest pricing level since the COVID-19 recovery period began. Now, in contrast, LME copper prices remained relatively stable throughout the same period. Why this discrepancy, Craig?
Yeah, so the discrepancy was driven by the expectation that the US government would impose a 50% tariff on copper, which didn't eventuate, and it temporarily inflated prices until that decision was announced on 30th of July. I mentioned earlier that the US consumes 1.6 million tonne per year of refined copper, and that accounts for around about 6% of global refined demand, which is 27.5 million tonnes. While China is the largest market and they consume just over 16 million tonne. So it's 60% of global demand, and it's about 10 times the size of the US copper market. So while we've seen some distortions to prices and metal flows created in recent months by the expectation of US tariffs, the key drivers of global copper prices remain unchanged. And on the demand side, that's global economic activity, particularly in China, the green energy transition, growth in emerging economies, and as well as demand in more mature Western economies. And on the supply side, copper mine supply is currently tight, and the constraint on refined copper production is the mine supply. And that's been exposed to disruptions. Most recently, we saw Kamoa-Kakula mine in the DRC experience seismic activity, which resulted in flooding, and that's a major mine. And more broadly, sentiment is important to copper. Copper's price is very sensitive to the global economic outlook, and it's therefore heavily influenced by expectations for Fed stimulus and China economic stimulus measures. So prices outside of the US reflected the more usual price drivers, albeit they were supported to some extent year to date by the lower stocks, as much of the available copper was shipped to the US.
Okay. Well, has a striking price gap provoked an exodus of copper inventories from the LME markets toward US buyers?
It certainly has. The LME stocks have declined by around about 130,000 tonnes year to date to a bit over 140,000 tonnes now. At one point, there was an even bigger exodus, but stocks have started to build in the past month or so. Whereas in the US, visible stocks have increased by around 150,000 tonnes over the same period. But we estimate there's a further 250,000 tonnes, perhaps more, stocks which have flowed into other non-COMEX warehouses or to the semis mills that consume the refined copper. So these are more invisible stocks.
Well, meanwhile, traders had rushed to stockpile copper before Trump's tariffs. Now, they're stuck with a lot of it. So how did the pre-tariff arbitrage opportunity distort inventory flows? What's the outlook for existing warehouse stockpiles?
Yeah, so as just mentioned, there's been a huge redirection of copper cathode to the US to chase the high prices. Now the US has at least 5 to 6 months of excess stocks based on their underlying rate of refined copper imports consumption, which is about 75,000 tonne per month of imports. So we expect that inventory overhang to continue to weigh on the US market until the end of this year, at least.
Right. And with COMEX inventory surging nearly 170% in weeks, how long do you expect this overhang to weigh on US copper prices?
The excess stocks are likely to be reflected both in US copper prices and metal premiums, which is what buyers pay as an additional charge or discount if it's negative on the exchange price. If US prices fall below LME prices, this will create an export arbitrage opportunity, which will see traders export some of these excess stocks from the US back out to the rest of the world. And this would help US stocks normalise over a quicker time frame than if we were to simply rely on US domestic demand to consume that excess material. At the same time, prices in the US are still exposed to global copper market dynamics. I mentioned earlier the US accounts for 6% of global copper demand compared to China at 60%. So US prices will continue to also be very much influenced by the day-to-day drivers of global copper prices, such as economic data releases, stimulus measures, supply disruptions, and risk appetite or sentiment more broadly.
Okay. Are we seeing signs of opportunistic buying from manufacturers or infrastructure developers in the U.S. as well now that prices have dipped? Could this offer a floor to prices?
Well, it's a bit early to say now, but with prices increasing sharply in recent months, we don't think there's been a lot of opportunistic buying yet. But now that prices have fallen 30% from their peak, and with metal premiums also under pressure, it's likely we'll see copper semis producers look to take advantage and restock, but they're unlikely to be in a hurry to do this given the size of the inventory overhang.
Well, given this, then, what are the key global demand side drivers that could reverse the bearish trend?
Most important is China. I mentioned at 60% of demand, and Chinese apparent consumption grew very strong, 11% in the first 6 months of this year. And while there's an expectation that Chinese demand will slow into the second half, we're factoring in 5.2% demand growth for China this year, which is still a very strong number. I mentioned earlier demand in India continues to grow strongly for copper and other industrial metals. And we've also seen some signs that markets like Europe have stabilised, are waiting to see if they recover later this year and into next year. And a key driver will be expectations around economic stimulus. So if the Fed cuts rates or if China announces further stimulus measures, they'll also support demand and prices.
I see. Well, looking ahead as well, Craig, are there technical or psychological price levels traders are watching for copper that could act as support or resistance?
Well, in recent times, copper has tended to find support around $9,000 per tonne. And while we've seen prices retreat at times into the 8,000 range in recent years, it's generally been short-lived and prices then go back above 9,000. Another important level is $10,000 per tonne. Copper prices in recent years have struggled to stay above that level for an extended period as Chinese semis producers that consume the copper, they generally stop buying when prices get to these levels and they just work down their stocks and then prices go back down below 10,000. But we see producers requiring copper prices over the medium to long term to be above the $10,000 per tonne level, and that's to incentivise the new mine production and therefore make the final investment decisions on the projects that are required, the new mines, to meet demand into the future years. So in the coming years, we see prices increasing above $10,000 per tonne and eventually sustaining those levels.
Some great insights from you there. Thank you so much, Craig, for joining me today.
Thank you, Hongbin.
Thank you. That was Craig Lang, who is a principal analyst at CRU Group. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.